Hi, how you doing? In the next 5 minutes, I'm going to show you how my trading system identifies high probability trade setups on a continuous basis, day after day. What you're looking at here is the trend predator indicator. It's an indicator for which depicts the context across multiple time frames looking left. So we're looking at the monthly chart, the weekly, the daily, and in the main, the 8 hour chart as well, the highs and lows, and the conditions for which each one of those periods are either in breakout or in breakdown or ranging sideways, fake out high, fake out low. And the combination of those conditions across those time frames, coupled with such factors as whether the market is in 3 weeks or 3 days or 3 sessions of continuous breakout, aligned with a first red period close. So, for instance, looking at the weekly chart here, which is what the indicator is showing us, that we could be in a period of deceleration. So, if we look at the weekly chart, we can see that it's inside of last week's range. Is it heading higher? Is it heading lower? We don't know. But what we can do is we can take the previous week's condition and assume that we will stay in that same condition until proven otherwise. So the previous week's condition was a breakout of the previous week's highs, breakout and failure. That's a fake out high. So long as we stay below that level, we assume the downside. Okay, when we've got 3 weeks of continuous breakout without any significant pullback as of yet, well, we're starting to think, is this market potentially overcooked? Coupled with a first red week close after a series of bullish weeks, well, that indicates to me that considering we've broken out of last month's highs over here, well, markets do one of three things. They break out and they pull back. It's one of the things that they do, and continue or fail. So I assume that we're decelerating and there is potential for a correction back into that breakout level. 3 weeks of continuous breakout, a first red week is all pointing towards exhaustion. And when we apply that to what's going on to the day itself, when I come into my trading window, allowing the market to set up 9:30 a.m., then I have a box. From 9:30 a.m. until 10 a.m., I have what is known as the opening range. Many apply it on the 5 minute, the 15-minute charts and time frames, or range, I should say. I prefer to see a full 30 minutes into the new hour of price action. And what I'm doing here is I'm overlaying the developing profile, the TPO profile. Others might use the volume profile. I prefer the TPO, time price opportunity, how much time the price has spent at a particular level on the chart. And I have a confluence of levels over previous profiles. And that would be, for instance, on the day itself, we have the Globex profile, we have the fixed and developing. I've got a profile here that shows me that the majority of the time today, the price stayed within this box. If we're moving away from it, I assume that we might stay out of it. But if we come back inside of it, then we're getting accepted. We're getting drawn back into that value area. And that's exactly what we got on the Dow Jones today. We got a market that broke out of the value area, broke out of Friday's highs, testing the trap volume from yesterday's Globex. There's the trap volume. Okay, and I've got an indicator, the Trend Predator Pro, giving me a signal due to the fact that we are back inside of the fake out high level we just looked at a moment ago. Trap volume up top on the weekly chart, trapped volume up top on the daily chart. This is all looking rather bearish for a high probability outcome for my day trading today, to take the breakout of the opening range to the downside. Now, what I'm looking for, I actually took it higher up, but what I'm looking for is confirmation that we're now breaking away from the point of control, the developing point of control, that's at the London highs, the developing point of control and the fixed point of control on the Globet session up until 9:30 a.m. We're coming into line, aren't we? We're pulling away from the trap volume up top. We've got a signal on the Trend Predator Pro to be looking for our short. We assume, being Tuesday, that typically expands the range of the week. Monday's the opening range. Tuesday typically expands that range. If we're heading lower, then I assume we're taking out the lows of yesterday. Not rocket science. Okay, and I'm looking for the price to come into the previous day low, the liquidity below the London lows, a nice long squeeze in line with the higher time frames heading lower. The lower time frames align now because we're back below the London lows, taking out the Asian lows as we burst through into the low of the Wall Street range, opening range, okay, for a continuation into that low for a nice 3-to-1. Easy day trading, no stress, high conviction trade setups aligned with the overall structural moves in the market and conditions. And as a additional confluence, we can add the fixed range profile from start to finish of last week. And we can see also that indeed that volume up here on, what was it, Tuesday the 23rd was trapped. Really nice peak formation high. And today we're trading back inside of last week's value area high. So really, we had a really fantastic trade opportunity there out of the Dow. And then a final piece of information, what we look at is getting rid of all this blinding TPO, is the simple price behavior on the chart. Taking this on a 5-minute chart, we've got an indicator here, the Trend Predator fake out highlighter, a lovely bearish fake out high switch bar, a beautiful topping pattern, M formation, pullback we typically see, neckline resisting for the continuation, ABC out of the highs of the day, run out of the playbook, trading off levels, previous day closing price, timings, 15-minute rotations. There's a 10:30 a.m. entry, there's your 10:15 entry, or there's your 10 a.m. entry, 15-minute rotations, behavior of price, levels, timings. Thank you for watching.